Today, it's Edwin's Monday evening property rant. Hi again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Monday evening, Edwin's with me once again. Hi Edwin, how you going?
Martin, are we there yet?
Yeah, we're somewhere. I'm not sure where the there is though. You have to define that for me, I think.
Well, are we there? Are we at the bottom of the market? Interest rates going to continue to go up, or or is Lowy going to wet his pants this time around and just go up by in nominal fractions just to appease the property pundits and everybody else? But Lindsay David tends to think that 50% of the population is actually waiting or awaiting for a rate cut next time around. Look, to add to Lindsay's tweet, I reckon 100% of the politicians are also waiting for that rate cut.
Well, there's no doubt that there are some politicians with lots of properties, as we discussed the other week, and many of them will be struggling even with the rates where they are. But look, the Reserve Bank last week was very clear rates are going to go on going up. And in fact, Westpac's just come out with a 50 basis point forecast for next month. That's alongside ANZ now. So CBA is the lowest, but everybody else is saying higher rates. And of course, the Federal Reserve this week, later in the week, is going to lift rates further. The Bank of England also. And the more that they lift the rates, the more the rates are going to go higher. So I'm afraid that those hanging on a rate cut anytime soon, I think are going to be seriously disappointed.
Yeah, look, I just tend to think that you've got to take a page out of the US politicians at the moment, the current administration. Hey, wait, it's only an inch. It's only a little inch. Why is everybody worried about all this sort of stuff? Seriously. That was, I saw it on 60 Minutes. If it's on minutes and the leader of the free world is telling you it's only an inch.
It's only a little bit. Yeah, exactly. Yeah.
So what are you worried? But look, from that, from Lindsay's tweet, I think there were two takeaways from that I thought were absolutely hilarious. The first one was from Two Ducks, the Twitter handle Two Ducks, and he puts as US futures pace 90% change of 70 basis points hike, RBA needs to choose their poison. What a tweet. They really have to choose a poison. And traders trade. Lauren Trader, he I think his was also a classic. Just spoke to my back neighbor, had the house for sale a month or so ago. Real estate agent said demand was low, so they took it off the market. Said we'll try again in a few years. # Melbourne. Well, that is the fear that listings are going to go could go lower than the winter period, and we might see a dead cat bounce or a koala bounce or some sort of bounce.
Well, certainly listings are still relatively strong at the moment, as we'll see a bit later. But the sentiment is definitely turning significantly negative. And interestingly, in my surveys, there are two types of people who are still wanting to sell. Firstly, property investors, they're still trying to scrabble to the exits, right? Because they don't believe there's capital growth for the next few years, and it doesn't make a lot of sense. And the other ones are those who bought quite recently with big mortgages, and they're already finding that the rate rises are really putting pressure on them, and of course that's going to continue. So there is some logic for some people selling, but others who are thinking, well, maybe I'll test the market and see what happens, right? A lot of those are just coming off the market now, because unless you meet the market, you ain't going to sell.
Oh, well, that's right. I mean, it's just what you and I have been saying over and over again. The people that are on the market have to sell, must sell, need to sell. And this is something that it's going to be evident as we move closer to the end of the year and as spring rolls on. And I still think that the numbers that are on market, as you said, are still relatively strong. I mean, They're a little bit lower than the previous couple of weeks, but again, we go back to the fact that the rate rises, they're not really biting as much as what they will in the next month or two. That's when they'll really start to bite, and that's when people are going to have to make a decision. But the early birds, they're wanting to get out quickly. And for many of the reasons that we're going to talk about in the rant today, as to the topics that we're going to cover in the rant today, and one of them, of course, being the concerns again of supply chain issues, shortages, the whole thing about tradespeople not being able to get tradespeople. So you've got a lot of these investors. What we've noticed in the western suburbs and right up to Katoomba is we're noticing that people that have had properties for 20, 30, in some cases 40 years as investment properties, now they're getting out because they're just getting too old, and they, in a way they prefer not to fix them and to sell them as is, meet the market, consolidate that 10, 12% drops, and at the end of the day, these people bought these properties for in the low 100s, and now they're getting anywhere between 700 to 950. So to them, it's less of a headache to meet the market at the current where the market is right now, and get out, because it's going to be a major headache for moving forward to try and get things fixed if you can get tradespeople.
And the other point, Edwin, is that now, of course, the deposit rates for term deposits, you can get 3 and 4%. And once you've sold your property, you're sitting on cash, or you stick in term deposits, and you can get a firm 4% without any worries about repairs or fire alarms or damage from tenants, all those things. It's changed the game, actually. There are a number of people in my surveys who are now saying, actually, I'll just take the simple route, because I'm not going to the stock market. They're going to continue to fall. I don't think the metals are going to work. I don't think the bonds are going to work. And I don't think property is going to work. I'll just stick it in deposit account now, because I can get 4% term deposit. So it has really changed the game.
Oh, come on. Well, you got to have a bit of fun. Why not buy off the plan? The state government, and they need a bit of stamp duty. So seriously, these people that want to get out and put in term deposits and not have a headache. Well, what's the fun of living if you can't buy off the plan, or maybe get back into crypto? I'm thinking about getting back into crypto.
Oh, really? Okay. Well, I think I'll just park on the crypto at the moment. But the point is, many people would say, well, if I'm going to stay in property, one, I don't see capital growth over the next few years. Two, the regulations are getting tighter and tighter with regards to obligations on property investors. And three, my net return, so that's not the gross return, which is everybody quotes, but the net return, the real return, is under 1%. Doesn't make a lot of sense. I can get 4% on term deposits without all the worry. There you go.
There you go. Or you can go out and buy yourself, go to Bunnings and get yourself about 100 rolls of copper cable, or get about 1,000 lengths of PVC, store them. Look, you'd almost double your money, I reckon, in 12 months.
Absolutely. Or you could buy a few of those very cheap iceberg glasses that are now back on the shelves again after.
I think that's a bit of underquoting, personally. Lindsay put up. I think it's underquoted. I still think that they're asking that they're going to be closer to $8 or $9 once they go to auction. But, who knows?
Well, let's talk about the WeChat chatters, because there's a few things going on there too, aren't there?
Oh, look, apart from the political scenes and everything else that goes on over there, and push for this hunger and thirst for China to invade Taiwan, not by China themselves, but by other countries. It's incredible. But look, outside of that, you got to give it to Xi. He's out and about. It's again, the leader of the free world said the pandemic's over. That's it. So Xi's out and about. Rubbing shoulders with global leaders. So things. We've turned a corner, Martin, on that side of things. But look, I think what's caught my attention over the last week, and unfortunately, I've been begging the WeChat chatterers from China, from different cities, to send me the photos of the ads. Is Australia has been advertising heavily for students to come into Australia, and my understanding is that because it's sanctioned, those ads are sanctioned by the CCP, and they're all over. Not only Guangzhou, but other cities as well, and there's a lot of them. So they've got to be sanctioned by the CCP. So they're really getting ready to come. That's the students, and of course you got to understand that it's not necessarily the middle class level students in brackets. that are going to be coming. The ghost that end up being ghost migrants and working, for in the as labourers in construction sites and the like. But it's going to be students that are looking for that honours degree or a master's degree. In other words, people of high net worth, and that have got great connections. So they will be coming, and that's why I put that tweet up last week. With our leader, smiling and so forth. Because at the end of the day, Martin, I just keep on saying over and over again, the first home buyers. Unfortunately, I know if he wasn't so serious, it's a joke. But they're just getting hammered. They're just getting hammered from all directions, because that's all I can see as to when the tide of immigrants are going to be coming, and particularly students. And again, when first home buyers, even if they thought that they apartments now were within their reach, if they wanted to move into apartments in around the central hubs where you find the tertiary education facilities, well, once again, they're going to be snapped up by investors, and they're going to be turned into bed sitters or bed lettings and so forth. And homes, that's another story again, because more and more facilities that we're aware of, more the WeChat chatters, the local WeChat chatters are buying more 4 or 5 bedroom homes, once again in the lower bracket areas where in the hubs where you generally find a high concentration of tenancies, and they're converting them into makeshift hostels or boarding homes, which is again it's going to put pressure on the from the tenancy side of things, but also from the first home buyers that would have thought and aspired to finally get a breath of fresh air and move into the market, but they're not.
No, that's very interesting, Edwin. And your comment about let's just convert them and never mind first time buyers. That's certainly what we're going to see, I think, ahead. And I quite like the earlier cartoon where it said, well, let the Chinese sort out with the Russians, and then just throw a few more students our way. Easy.
Well, that's it. Look, and as you say in your videos that you post out on a regular basis, things are getting easier. Standard of living is just getting more and more expensive to maintain your where you may have been 6 months ago or even 12 months ago, let alone in 2019, because everything's just going up in price. And just wait until summer, when energy prices are just going to absolutely go through the roof. That's why we're going hell for leather in regards to we're up to the stage of now getting the roof's ready for solar. But not only that, but also getting ready from talking to our electricians to put in a backup generator as well, and get that hardwired into the system, because when all else fails, that you got to have that backup generator. So all these things that people have just got to plan ahead. But it comes at a price, Martin. Things are just not cheap and very expensive. But what do you do if you want to maintain a particular lifestyle, a particular standard of living, and just a normal standard of living? We do things within our means. When I say we, you and myself can do things within our means. But what about other people that are tenants? What are they going to be doing when with the power bills and outages and so forth?
No, I agree. Yeah, when it's a very significant question, and of course the power bill will just keep going up and will continue to go up because it's linked to the price of gas, which is still sky high. And it's interestingly, of course, there's thinking about one of those articles, right? 4-day week. Well, maybe we should actually be working less rather than more. Well, at the moment, there are more people with second jobs trying to work a few more hours to try and get a bit more money in to try and pay the bills. So I'm not sure how this article cues up with that.
I don't understand it either, because I would say that 7 out of 10 people that I know have got a side hustle. Other than particularly when you start talking about young families or people with families, it's to maintain a household is getting more and more expensive. So you've got all these costs that are just adding up, and now they're pushing, or they're wanting to push for a 4-day week. I don't know. The world's just upside down, mate. It really is. It really is upside down. Look, and if somebody wants to, somebody out in YouTube world and our followers, if they want to side hustle, where the different teams that I operate with regards to renovations and assisting our clients to do renovations, they're one of the hardest areas to fulfill jobs is the post renovation clean, and we just can't get enough cleaners. I mean, we've spoken about that in the past, and I've tweeted about that in the past as well. Yeah, you can get quotes anywhere between $1,500 to $2,500 to do an after renovation clean of a 4-bedroom house. When 12 months ago or even 2 years ago, you wouldn't be paying more than $600 to do the same job.
Absolutely. Well, it just goes to prove supply and demand. And of course, part of the issue here is that we have a lot of the population who are working as many hours as they can work, and they're still not making enough to get by. That's why the stress is so high, looking at rental or mortgage stress. I'm not sure what else to do, to say to people when they're already running really fast, unless they switch into a different track and find something else to do. As you say, maybe renovation cleaning is the way to go.
Oh, it's certainly, it's just one of those one of those jobs that either people don't want to do or it's just not enough. Look, I sort of when a lot of the South Americans, my compadres, went back to South America during the pandemic. Well, most of the South Americans were involved in that cleaning area, and then most of the Chinese were involved in the building industry and so forth. So you can see where the gaps are being, and the mass amount of people that left our shores, and now we're starting to feel it. So the calling, on the one hand, the calling for a 4-day week. And obviously then on top of that, then you've got the Financial Review also, bringing out other opinion pieces. One with regard to talking about commercial property that's absolutely getting hammered in the North Shore, in North Sydney, and also in the Parramatta CBD. So I mean, there are so many things about the place that are hampering any sustainability in terms of commercial. And of course, with the commercial properties or people not going to the commercial buildings or the commercial centres to work, you've got the other issue where the ancillary services around those commercial buildings, such as your cafes, your takeaways, your retails, they're also suffering because they're not getting the traffic. So it's like a Led Zeppelin, just watching a Led Zeppelin just about to crash.
Yeah, and the other one that was out at the same time, again talking about commercial, and basically saying, well, offices completely different now because people are working at home to be replaced by robots. So again, jobs changing, and you don't need offices. And we've been speaking about problems in the commercial sector for a long time, haven't we, Edwin? And finally, maybe the news is getting through. Although, interestingly, today, the RBA, one of the RBA people were out talking about property prices and interest rates, and they were arguing that the commercial sector was more insulated from interest rate changes than from the residential side. But I'm not sure that that's actually a very good opinion, because if you look at what they're saying in these articles, there's a bunch of other issues that are creating huge pressure in the commercial sector.
Look, this is the thing that a lot of people may not understand with regards to commercial. First of all, to let's say you were going to go out and buy a commercial property, right? It's not like you're going to be able to buy a commercial property with a 5% deposit or a 10% deposit. And it's not like the government's also going to go onto a joint venture partnership with you to assist you in helping you buy a commercial property, like a shared equity scheme, where they're going to give you the extra 20%. Typically, a funder is not going to fund your venture into a commercial property unless you've got a 35-40% deposit. So so first of all, you've got to have that kind of liquidity. You've got to have that kind of cash under your mattress before you can go out and even think about buying a commercial property. Secondly, when you go out and buy a commercial property, the valuation is going to be based upon the rental return. So values aren't silly. They're taking if they're taking a very risk adverse approach to value in residential property, you can imagine what they're doing with commercial property. And unless you've got you've got a triple A tenant in the premises, you can whistle Dixie as to whether or not that valuation is going to come in. Thirdly, when you're buying commercial property, Martin, a lot of people don't understand and don't realise that, because I've had a lot of people ask us over the last couple of years, what are the chances of them, us helping them buy commercial, and this is where it all falls apart. I said, if you're looking at an empty commercial property, well, you've got to pay, you've got to fork out the GST, because if you don't have a tenant in there, you're liable for that GST. Yes, you get the GST back, but that's got to be liquid. That's on top of your stamp duty, and on top of the fact that you've got to have 30%, 35, 40% deposit if your funder is willing to fund you. So there's a lot of issues. So working backwards from that, the RBA are looking at commercial property, or even the banks are looking at commercial property, and they say, well, we still got a bit of equity in there, because obviously, the LVR is 50, 60%. So there's still a little bit of liquidity in there if they need to, if they hit the wall, where there's still a bit of money that they could recoup. But based on the articles that we just presented, and based on the information that you and I have read of late, it's going to be, I can't see but a lot of carnage for, moving forward if things don't change dramatically. And I guess that is why we're going to be, they're bringing in migrants, and we're also not only calling migrants, but there's going to be a surge, in my opinion, of high net worth individuals wanting to set up businesses. And you watch this space. The red carpet is going to be rolled out. And I wouldn't be surprised if we go back to the early 70s, where people of high net worth, or people that are wanting to invest, they're going to get all sorts of perks in order to bring their money over and set up businesses.
No, I think that's right. Although it's interesting, I don't think it'll be in the retail space, because retail is not doing much at all at the moment. But I suspect that some of the manufacturing base might be interested there, and some of the service industries too. But I guess that the bottom line is that the commercial sector is looking pretty sick. And at the moment, again, if you think about property investors and, where they might invest, well, the returns people are getting on commercial properties at the moment are not very flash. Those term deposits look quite good again.
Oh, look, definitely. A few hundred sheets of gyprock stored in your garage, or make sure it's not, you don't get water through there, or it's not damp, could double in value in 6 months' time.
Exactly right. Now let's talk about the numbers, because you did say a little earlier the numbers are slightly down. 18,552. I think it was 18,700 last week. So that's a little bit of a slide.
Yeah, look, there is a little bit of a slide. The confidence isn't there. The people that don't have to sell or pull in properties off market, they're looking at other things, other ways of trying to stay afloat. And obviously, this is the impediment that we're going to face moving forward. Again, you're not really encouraging the empty nesters, or the downsizers, or the retirees from selling, because they're gonna hold on for a little bit longer. They're going to look at other things. The interesting thing that's been caught up by anecdotally by different people around Australia, and I put up a screenshot there of one particular one, and that is that how was it Powell inverted? Basically it starts was referring to what we spoke about a few weeks ago, and that is how we were starting to notice the apartments that were for sale are going across to the rental side of things, to the rental ledger, because of the higher returns in rent, and two, because they're also perhaps they're waiting for the influx of this wave of migrants, as well as the students, and potentially again they could go back to getting a greater rental return by subletting bedrooms as opposed to, or time sharing beds as opposed to putting them out in the normal rental market. So that's what we're seeing across the board. The auction numbers, there's a little bit more confidence, not a great deal, perhaps 10% more than than the beginning of last week's. But the confidence still not there, considering it's spring, and we should really be a lot closer to the 1,000 by this time. Even last year, we had a lot more. There was a lot more confidence in properties being sold by auction, let alone in comparison to now. So it is interesting. I still keep on saying you got to watch the numbers on a daily basis, particularly in the areas that you want to look at. There are some areas we are noticing that there's a lot more listings coming on than being taken off, but in other areas, there's a lot less listings than what there were, say, even 3-4 weeks ago. So it's got to be suburb specific or area specific for those that are our followers that are looking at property from a purchase side of things.
Yeah, and just talk about this idea of rentals. So this was a tweet that came in with talking about Brisbane auctions, but more importantly, look at rentals in eastern suburbs. So many previously for sale, couldn't get the price. Rental sites clearly using for sale photos and floor plans. Know that students are coming, but some of the heat is coming out of the rental market now. So it just shows you a bit of a dilemma that the markets are in at the moment.
Yeah, and it's something that we've been preempting anyway. You and I have been talking about it already, but it's now a lot of people are seeing that more just anecdotal, but nevertheless it's filtering through. As I said, the conversations will take a little bit to filter through. That's what our WeChat chatters have been telling us for a while. So you just got to follow the conversations and see how long things play out and take to play out. Look, on that, we've got Tarek's analysis of the weekend auctions, and even with Tarek's numbers, which line up a lot closer to Louis Christopher's ones, SQM. There's still not a lot of confidence when you think about it. As much as people like to beat their chest and say what a great auction clearance rates we had, the confidence isn't there. If anything, what we're noticing from all the Twitterazzi and also just going to live auctions and standing there and watching, what we're noticing is that vendors are really dropping their expectations a lot in order, as we say, to meet the market on the day, because they're somewhat panicked, and don't know. Bird in the hand is better than a potential higher price 2 weeks later or 3 weeks later, which So there's no real confidence. There's no real enthusiasm. I don't see it based on the numbers.
No, this is interesting, Edwin, and it's interesting in New Zealand. I was looking at the data over there, same story over there, slightly more so. But again, the real estate agents are saying, if you want to sell, the only way to sell is to accept a lower price and meet the market. Everyone's talking about meet the market. The trouble is that the more you drop, the more the markets drop, which means that you have to drop even further, right? So it's part of a spiral down, it seems to me. I'm not sure who the winners and losers will be in this.
Yeah, look. There was a reference to some commentary that Lowy was alleged to have made with regards to the market can absorb a 10% drop, because based on a 10% drop, his numbers were
the maths didn't work, right? It went up this much, down this much. No, it's not 10% that's left, right? So doesn't instill much confidence when your Reserve Bank governor essentially messes up on the maths.
Yeah, look, I get that. Each to their own with regards to how much properties are going to drop, how much property is going to go up in value, what you think. As I say, I think what you and I have been saying for a while is the fact that the unfortunate thing, the real losers in all this, again, are the first-time buyers that jumped in the majority of the losers are the first-time buyers that jumped in from the onset of 2020 till the beginning of this year, based on misinformation from all over the place, and also the fear of missing out and everything else.
And government stimulus, right? And government enthusiasm to, buy now. I remember some politicians saying, "You must buy now. It's a great time." I remember it. They were spruiking it.
Yeah, and all along, you and I were saying, if you're going to buy, if you really need to buy, you have to buy. You got to buy with that upside in order to cushion an economic downturn. Here we are. I mean, I think it was 3 months ago. I made it, or just over 2 months ago. Call it 3 months ago. I made a comment saying that we're walking into a recession. I think that was at the time where the mainstream media from America and locally was saying that this is only the recession was only going to be transitory, and at that time I said, it's only going to be transitory until we go into a depression. and now Bloomberg's talking about a depression. Yeah, so I mean, how much more? So people are still buying.
Yeah,
I get that people are still buying, and they're buying for their own specific reasons. Once you take away all the fluff and all the hype and all the emotion out of the Twitter sphere and Facebook sphere and every other social media platform, and what core logic and no logic and every and REA and all and domain and everybody else that refers just back to auction clearance rates and makes a big deal out of it. Once you take out all the fluff and all the noise, and you just got to be so careful what you buy, how you buy. When you buy, like I can tell you right now, Martin, I've got 2 deals for 2 different clients on the table, right? And they're being seriously considered. One is for a first-time buyer. The other one is for an investor, right? And both, the commonality between both is that we've asked for delayed settlements on both occasions, because the delayed settlements will put our clients in a much better position financially when it comes to settle. So there's you just gotta understand, and as I said, you buy with the upside. Whatever's going to give you that upside, and for whatever reason that you want to buy, whether it's an investment, whether it's a principal place to residence, whether it's for shits and giggles, I don't know, whatever, you for whatever your reason is that you want to buy. What we say to all our clients is, you just got to buy with that upside, keeping in mind that things could get worse before they get better, and as long as you're able to sustain your position, go crazy, go buy. And it all comes back to what people want to buy as well. There are some people that are making squillions in terms of the employment contracts, and there are other people that are just the average Joes that just want a roof over their head in the western suburbs.
Absolutely, but the point is, if you are going to buy, then buy on the right basis, as we've been saying for some time. Now let's go on to wackier than a conspiracy theory, because this is an amazing one. We talked about last week about reverse auctions, right?
That's right. So this is it. Now, look, the great thing is that people must be, they're following us. They're listening to us, mate. That's a good thing. So, what's wackier than a conspiracy theory? A live. Not only is it noted down as a reverse auction, but it's actually live, where in Queensland of all places. I mean, anything goes in Queensland and Victoria when it comes to auctions. Where the vendors bid. Because in Queensland you can back as many vendors bids as you like, unlike New South Wales, where you only get one vendor's bid only if it's announced that there will be a vendor's bid prior to the auction. But in this case, the vendor's bid of 900 was retracted, and the purchaser bought it for at $8.95. Oh, sorry, $8.55. So it's great. Give the man a cold one, I'd say, or a tequila or something.
That's pretty interesting, right? So it came down quite a long way from where the earlier market expectation was, and I quite like the idea of reverse auctions. We'll start high and go low and see how low we get.
Yeah, and again, it goes back to what we've been saying: is just because the auctioneer says something on the day, the only thing that you could say that you can't do is you can't collude, right, on the day. But there's no, but you can put out whatever words you want, whether the auctioneer takes it or doesn't accept it. That's up to them and how they conduct the auction. It's like walking into a boxing ring, and your opponent tells you, hey, you can't you can't do any right hooks, or you can't punch straight. That's how I want it. That's how I want the fight to be. I mean, seriously, yeah, it's outside of the rules. It's anything goes. Like
Absolutely.
so, but a lot of people, unfortunately, believe everything that the auctioneer or the agents are telling them before the day of the auction, by way of pricing, and the auctioneer on the day, babbling away, instructing the pundits or the prospective buyers as to how he wants to conduct it. Hey, providing that you haven't colluded with anybody else that's on the floor, it's anything goes.
Yeah, be creative, and remember, it's theatre more than it is anything else, right? Now, here's another one which I want to talk about. This is pretty amazing, right? Some were sold off the plan as long as 16 years ago and never fitted out. Now they're on the market for millions of dollars. So this is the vacant property story, right? Which is a big one, because we know that in some postcodes there's a lot of vacant property that's never been lived in. And why? Well, because maybe it's money laundering, maybe it's insurance fraud or family. Yeah, who knows? But the point is that there's a lot of it about, particularly actually in and around Docklands.
Look, exactly. You really got to ask yourself the question. I mean, when Dusty and I were reading, we're watching the this on the Twitter feed. I mean, it's just they're the thoughts that came to mind. I mean, look, you've got to think about it. But look, apart from the money laundering and family law issues, insurance fraud, property settlement issues, state disputes, insolvency, too costly to complete was top of the ranks with us, and they don't want to. But I think one of the things that really came to mind, and we were talking about it, and we honed in on, was the person that's going to be looking at, but they better really search the plan, look at the plans very, very closely, and the strata plans and the construction plans, because it wasn't until there was an issue with Opal Towers, Mascot Towers, that people didn't realize all the BS that went on in the background, and then they find themselves in a dilemma with so many issues. So this is the time where you really need to do your due diligence, and you better get yourself a good property lawyer to make sure that they handle your conveyance. Otherwise, you're going to be in a world of in a world of caca, because it's who knows what's under there. Because you got to really ask yourself, who the hell sits on $23 million worth of real estate and doesn't do anything for 16 years.
Yep, well, exactly. And it's interesting because if you look at Victoria postcode 3000, right, 32% of properties were vacant there according to the census. 32%, right? Huge numbers, right? And most of them are units, most of them are in the high rise. And I think a lot of people just bought them a long time ago and are sitting on them, not completed, not fitted out, and just waiting for the value to go up. And I guess the question I've got is whether that's a good use of property, and whether it's actually, I mean, it may be legitimate legally, but the question is it morally a good use of property?
Yeah, well, it's interesting, Martin, because you look, I'd sort of, I mean, I'm speculating. I haven't really looked into it, into that listing. So I'm speculating. Yeah, and there are a number of things that just send alarm bells ringing. One of them is you're building. The whole building's going up. I mean, you're fitting everything out. Why not fit out the penthouse? I mean, I only see this sort of stuff happen in China, where China, or even in the States, where properties aren't fitted out.
Yep.
Because at that time, that is when it's going to be the cheapest the most affordable and the most economic and most logical way to fit out an apartment is during construction, right? So you got to, why didn't it get fit out? So secondly is the person that owns it, it's got to be tied up to the original builder developer, because otherwise you would really expect the developer that's the penthouse or the sub penthouses and the penthouses are typically what they call blue sky. That is where most of the profit is for a developer. And so why wasn't that realized? So there's just too many alarm bells ringing for our liking. So yeah, they better have a good conveyancer or conveyancing lawyer to look at the contract, look at the background, and be prepared to go through the strata plan from registration and pre-registration till now. But
well,
then again, 23 million.
Another question, which is, of course, you would normally get it certified at the end, right? So that you can move into it. Well, if it's not actually fitted out, they can never get it certified. So you may well have a property that actually isn't certified for use.
Well, there's no. Well, I get. Yeah. That is an interesting question. That is because you would have obtained occupation certificate on the whole building. But there's I don't know. Again,
I'm just illustrating the questions you would need to ask if you were ever confronted with such a story. So it goes on and on and on. I can tell you. So
in that video, one of the real estate agents made a comment that they've got two. I think it was two quotes that came in around $7 million to fit it out. Look, I would say if that was, I'm not saying it's not true. Yeah, but if it was, I'm not saying it isn't true. Sorry, but so if they're alleging it was 7 million, I would say multiply that by a factor of 1.35, and you probably come to closer to reality. Can you imagine the hassle? I mean, the stuff would have to be. I helped a developer, one of my old clients, look at. They did a retrofit of a sub penthouse unit in the city, and I watched them and I helped them with a couple of things there. But I helped them out, and I was watching the whole development. And I mean, this is a swanky building in the city with a concierge and everything. They had to book the lifts for certain times of the day, and you couldn't get materials there. It was an absolute nightmare, let alone in and that wasn't in comparison to this apartment there, this penthouse there. It was a shadow of what you saw in this video from Channel 9. So it was, I can only imagine the headache. Hence the reason why I say you better multiply that by 1.35, if not more, to get a reality check on what it's really going to cost to fit it out. And is it worth that much at the end of the day?
Absolutely. And of course, remember that if you're going to be using lifts, they're probably going to be lifts that other residents will be using as well. So the logistics of getting materials up and down, not straightforward. I can tell you, not straightforward, right?
No, the manual labor is just going to be so intense because everything will have to carded in a way that it's demountable and then assembled. So even if you really wanted to go full swanky with the kitchen bent tops and everything, you're going to be limited to what you can do. It's crazy stuff.
Yeah, well, let's talk about crazy stuff from another one, because of course we have the old Tom Panis property price index, right? Which is, well, it's an interesting journey, Edwin. I can tell you that.
Yeah, look, it is. So if you want to show the slide by slide to where we are at the moment.
Yeah. So August the 20th was the first one, right? So we're very close to the bottom, right? August the 27th. I don't think we'll see frenzied selling in spring, but let's see. Clearance rate 4 out of 11, right? Then it went to buyers are anxious about upcoming interest rates. and then the RBA has got this wrong and performed poorly, and my clearance rate today, 5 out of 7. I think the RBA will be conservative with interest rates leading up to Christmas. So, Edwin, help. I don't know which way to look.
It's really like we keep on saying, it's an interesting take from an individual that looks at blaming the RBA. I mean, how many people aren't blaming the RBA for? But I think he's blaming the RBA for the wrong reasons. I think we go back to the fact that there's just no confidence. And
Yep.
and the more I look into his tweets and the more I look into the Tom Panos property index, the more it just becomes clear that I think most of the complaining is really about the work, because there's less. He's obviously conducting less auctions than what he was before, and this is what happens with as we move into this tightening markets, is when you've got less confidence. And he's one of perhaps 350 auctioneers that are out there, trying to earn a quid on a Saturday, because unless you're just moonlighting as an auctioneer, Saturday is your day, apart from midweek auctions.
Yep.
So obviously they're not turning over the money. The interesting thing is going to be looking back as to actual transactions over the last month on a week-by-week basis. Obviously, we're not going to know this until for another 60 or so days. By the time they're registered with the Bailiff General's office, with Lens and Title's office, it's not going to. We're not going to really know. But this is where the industry starts getting into trouble, is when there's not a lot of activity, a lot of sales, and property starting to lag on market. And this is where we almost, I think we're moving to where we were when we were talking about the perils that the real estate industry was in back in 2019, Martin.
Yeah. It's looking shaky. I was talking to a couple of people in the industry over the last a few days, and both of them are saying they're running around like mad headless chickens, but not getting any transactions through the door. They're getting some listings, but they can't shift anything. And of course, that means that they're spending more time and effort and money, but for no return.
Oh, poor little souls.
Yeah, isn't it sad?
I still think that, look, as I say, going back to my average, I think, $1,436 per hour. I mean, gee, poor little bubs. What can you do? Look, at the end of the day, these are the times where we're really where you really need to list your property with seasoned agents that are going to be prepared to do the work for you. Yep. These bullshit 15-minute, half-hour open house inspections in this climate just doesn't work. It just doesn't work. You've got to be prepared to have an agent that's going to do your 1 hour opens, a couple of times, and be Johnny on the spot when it comes to somebody wanting to show the property private, on a private viewing. I'm at the moment, with another client, we're chasing agents in Blacktown of all places, and you'd be lucky to get a text message back. You'd be lucky to get a phone call back, and you look at the amount of listings that they're carrying, and it's unbelievable. And some have got the audacity to say, "Oh, mate, the open house is on the Saturday. Look, I can see that it's that the house is staged, so it's obviously vacant. Can I see it? Because I'm personally, it's a personal client of mine. I'm tied up that particular hour that you got your open amongst all the other bastards in Blacktown that got their open. I didn't say bastards, but amongst the other agents in Blacktown that have got their opens at the same time as you. It's really hard to get around. Yeah. So can you accommodate? I mean, it's you'd think that they would accommodate you, but they don't, and that's what I'm saying. Poor little bunnies. So it's the good ones will stay on. The ones that came out of the used car sales yards and you have to basically become order takers in the good days, they'll be gone. And unless we have a huge stimulus like we did in 2020, with JobKeeper and the like. Who knows what the government's going to throw at us? I think the industry this time around, we will see a huge exodus of those that don't really want to work and do the hard yards in order to get the sales.
Absolutely. You have a visitor there.
Yes, Dusty.
Hi, Dusty. Yeah, but the point is that I'm not sure the government's got the capacity to throw a lot of money in the system at the moment, bearing in mind that the deficit's pretty big, bearing in mind the economy is looking pretty shaky. I guess we'll know in the budget in a few weeks' time. Well, let's go on to the tip of the week, and I think this is one that we've touched on, but it's really worth spelling it out, isn't it, Edwin? Because if you are going to do any renovations, if you are going to make any changes, you've got to do some extra steps to make quite sure that you're not going to actually dig a hole for yourself.
Definitely. Look, this is something that's I've seen a few commentary in different social media platforms, and a lot of people whining and carrying on about tradespeople not willing to give quotes. I can tell you one thing, that you'd be lucky to get tradespeople to do quotes. They're just rolling from one job to the next, because at the end of that, they're calling the shots. So, but look, if you're gonna, or they want to be paid for to do a quote, because it takes time off the day that they're otherwise earning, a good coin presently. So but I would say pay somebody well particularly if you're looking at a property. Unless if you don't have an understanding of what it's going to really cost to get things done now, depending on on what you want, what you're looking at getting done to a property that needs renovation. Also, more to the point, something that's more of a knockdown, or than in a rebuild type of property, because there are a lot of things, there are a lot of issues that we're facing in a number of different projects that we're managing as well. And a lot of it comes back to trying to find the tradespeople being available on time in order to keep the job rolling. So on that note, I would say pay somebody, be prepared to pay somebody to go and give to give you an opinion as to what it would really cost. Don't just listen to the agent that's at the front door telling you, oh yeah, look, it's only gonna cost you, like an agent told me 2 weeks ago, and I said, mate, this is a knockdown. He goes, yeah, but mate, you can get a 4-bedroom house built for $350,000. I said, well, I'll tell you what, you give me the contract for $350,000, and I'll give it to my client, at $550, because that's how much it's really going to cost. I'll make $200 on the side. I mean, they're obviously shooting the prices down in order to make you think that you're going to be spending a lot less, and you're not. And on that note, I mean, the Financial Review just put out an article with regards to that, and that is, worker drought puts the brakes on the building boom. So this is what's really happening out there. And if you read through that article, it is an interesting read. And our viewers need to read the article. Also take note of what's happening out there. We're talking about supply chain issues. We're talking about lack of the construction workforce, and things aren't going to change for another 2 or 3 years, Martin. In my opinion, they're not going to get any better for another 2 or 3 years.
No, that's right. And at the end of the article, I asked why central banks are trying to dampen activity at a time when more dwellings are needed. Dr. Kearns agreed rate rises tended to reduce construction activity, but said the bank doesn't get to pick and choose which channels monetary policies operate. So again, they're coming back to the Reserve Bank. But I have to say, at the bottom of the article, there was a little ad there: portable buildings for sale, space pods. And I thought, well, maybe, there you go, that's the solution. Maybe we should just go straight for some space pods rather than actually trying to build stuff. What do you think, Edwin?
Yeah, I thought you liked that when I sent that through to you. I thought you'd get a buzz out of that. Of all places to put the ad on that article. That's it. Look, that's it. Look, that's why Jose El Rooster and we're going hammer and tong and trying to get this chicken coop and the penthouses put out to get rented out. So it is interesting. Things are going to get minimalistic and prices are going to, potentially go up. But look, I don't know. At the end of the day, Martin, what's your view? Are we going to see a bit of a dead cat bounce because of what the mainstream are calling? And let's say if, I'm not saying they will, but let's say if the RBA don't, let's say they go out with 25 basis points this time around.
I don't think they can, you see, because I think they're going to be caught because of what the Federal Reserve is doing and what the other banks around the world are doing. They can't go too far out of step. And in fact, on Friday, when Phil Lowe was giving evidence in front of Parliament, he was making the point that we have to continue to lift rates. He did sort of hint that we could slow down the rate at which we move rates up eventually, but there was no real strong indication that meant that next month it was going to be 25. And if the Federal Reserve comes out with a 1% hike later this week, and some people are now saying the Bank of England this week, because they're a week behind because of what happened last week, the Bank of England is going to be announcing as well this week, and they're talking maybe up to 75 basis points, or somebody actually tonight said maybe even 1%. So a big move there. The Eurozone moved 75 basis points. New Zealand, of course, moved strongly. Canada moved very strongly as well. So the point is, everybody else around the world is moving strongly. We can't go too far from that. We can't deviate, because if we do, we're going to murder the exchange rate. And that's not going to work. So I think we're going to be above 3%. And in fact, Phil Lowe, in his discussions on Friday, said maybe the cash rate long term is going to sit around 3%, up and down a bit because of the cycle, but around 3%. Just think about that. A base rate of 3%, which means mortgages are going to be between 5 and 6.5% into the future. That's a shocking revelation for many people, right? So I'm not sure that we can plan for a drop in rates based on what's being said. Now, maybe that'll change, but at the moment, I think we're going to have to factor in higher rates, which means that people can borrow less, which means that it's going to slow down, which means we're going to put more pressure. It's going to put more pressure on builders as well, because they're going to have to fund the costs of developing and all that. So wherever you look, recession feels the strongest exit point rather than actually a rebound at the moment.
So where do you think the mainstream are going to go then? Where do you think the property aficionados in the mainstream are going to push? Then is it going to be purely on stock numbers or for sale? When I say stock numbers, I mean for sale numbers dropping. That's gonna sort of basically be the narrative. Therefore, there's got to be something for them to talk about.
I suspect partly that, and partly they'll be lobbying for more incentives from government, is my view. So the government's already brought forward the shared equity scheme by 3 months, right? They're going to try and bring it in sooner. I wouldn't be surprised to see some more of those shared equity type schemes, anything to try and spark the interests of prospective purchasers. But I can tell you that a lot of first-time buyers are getting really, really nervous now. If you're not in the market yet, you're watching these interest rates rising, you're watching your borrowing power being eroded significantly. And, the fear is if you buy now, even if you buy one with upside, you might be buying a property with downside. And with rates rising, the downside could be quite significant. And of course, Christopher Joy is still saying he thinks there's more downside to property. And in fact, another analyst came out today saying 25% fall from here. So it's not looking good.
No, it's going to be, look, it is going to be interesting how it all unravels. I'm sort of keeping an eye on what's happening in America with, I mean, we're coming up to the midterms, and that's also going to, there's a huge upheaval there. Not to mention what's happening with the with Russia and China and Xi's position that he's taken. But interestingly, in all this, Martin, I think the quiet, what would you call them? The quiet achiever has been India. They've been really quiet. My understanding is that they're buying petrol from Russia and then selling it to Europe on the side.
Correct. Nice little learner.
I was wondering, could we buy cheap land somewhere in the inner parts of Australia and flog it off to somebody? Think about
Well,
that.
what about buying cheap portable buildings and then flogging them off? There you go. New business model.
That's it. That's it. Anyway, it's been fun. Let's see what happens next week, Martin.
Yeah, it will be very interesting, Edwin. Thanks for that, and thanks for all your work on the slides and things. And we'll do it all again next week. See you later.
Definitely will. Ciao.
Bye.